Imagine this. The same man who spent years warning America about inflation just said the AI boom isn't a bubble. That man is Jerome Powell, the chair of the Federal Reserve, one of the most cautious voices in global finance. And yet, this week, he looked straight at reporters and said something nobody expected. These companies actually have earnings. It might sound simple, but that one line just changed the tone of the entire AI debate. For months, investors and analysts have whispered the same question. Is this AI frenzy just another dot-com disaster waiting to happen? Billions are pouring into data centers, chip factories, and high-performance computing. NVIDIA's value is soaring. Microsoft, Google, and Amazon are spending hundreds of billions chasing digital gold. To some, it looks exactly like 1999. Hype, hope, and sky-high valuations. But Powell? He's not buying the panic. He's drawing a line between fantasy and fundamentals, saying this time, it's different. And if he's right, we might be witnessing not a bubble, but the beginning of a new economic era. Still, not everyone believes him, because behind the optimism lies a quiet fear that we've seen this story before. So what exactly makes Powell so confident that AI isn't the next tech crash? Let's go back to the beginning, to the fear that started it all. Every generation thinks it's found the next big thing. In the late 1990s, it was the internet. Investors poured billions into startups that had fancy names but no revenue, no business model, just a dream. And for a while, it worked. Stocks exploded. Fortunes were made overnight. Until suddenly, the dream collapsed. When the dot-com bubble burst, trillions of dollars vanished, and the so-called future of technology nearly took the economy down with it. Now, fast forward 25 years. The same excitement and the same fear is back. Artificial intelligence has become the new gold rush. Everyone wants a piece. From NVIDIA's record-breaking profits to Microsoft and Google's multi-billion-dollar data center race, the scale of AI spending is beyond anything we've ever seen. Factories are expanding, semiconductors are in short supply, and investors are betting everything on machines that can think. And that's where the anxiety begins. Some analysts are warning that history is repeating itself, that we're building another bubble, only this time with algorithms instead of websites. The question on everyone's mind is the same. Is AI the future of productivity, or the next financial disaster waiting to happen? Then came Jerome Powell, the man whose words move global markets. And when he finally spoke, what he said didn't sound like a warning. It sounded like a challenge. When Jerome Powell stepped to the microphone after the Fed's October meeting, markets expected talk of interest rates and inflation curves. Instead, he dropped a surprise. I won't name specific companies, he said, but they actually have earnings. It was the calmest possible way to make a bold point. This isn't the dot-com bubble 2.0. Back in 1999, most internet startups were burning cash with no clear plan to ever make money. Today's AI giants, NVIDIA, Microsoft, Alphabet, are different. They already print profits. Their spending is huge, but it's backed by real business. Powell made it clear that the Fed isn't worried about some speculative frenzy. The AI race, he said, isn't being fueled by cheap money or low rates. It's being powered by conviction. Corporations investing their own profits because they believe AI will reshape productivity for decades to come. That single statement sent a quiet ripple through Wall Street. It wasn't the warning tone traders expected from a central banker. It was almost an endorsement. For years, Powell had been the cautious voice, the one reminding everyone that bubbles form when optimism outruns logic. But this time, he drew a line. AI isn't just hype, it's infrastructure. Still, that confidence sparked another question. If Powell believes AI is real, then what proof does he see that this boom is more than numbers on a screen? The answer, he said, is already showing up in the real world, and it's changing the shape of the U.S. economy. You can see the AI boom in stock charts, but Powell says the real story is happening off the screen. Across the U.S., Construction cranes rise where farmland once stood. New data centers are swallowing up power grids. Semiconductor factories are working around the clock. This isn't a financial bubble, Powell said. It's investment in equipment, buildings, and everything that powers AI. He's not exaggerating. From Silicon Valley to Texas and Arizona, tech giants are spending hundreds of billions on infrastructure that doesn't just live in code. It's made of steel, concrete, and copper. Goldman Sachs estimates that this investment wave could add up to $8 trillion in long-term value to the U.S. economy. J.P. Morgan says AI spending alone might lift GDP growth by almost 0.25% next year, comparable to the impact of America's energy revolution. That's why Powell isn't calling this a bubble. He's calling it a transformation. Unlike the speculative frenzy of the dot-com era, this boom is being financed through corporate profits, not borrowed cash. It's not an illusion of value, it's a shift in where value is being built. And you can feel it in the data. Record power demand, new jobs in tech infrastructure, and cities quietly turning into AI industrial zones. Still, Powell knows better than anyone that every boom has a shadow. Because while the cranes are rising, something else is quietly breaking beneath the surface. And it's not about money. It's about people. Powell might believe the AI boom is built on real profits, but even he admits there's a risk hidden beneath the optimism. I don't know how those investments will work out, he said carefully. It was a single sentence, measured, cautious, but loaded. Because behind every data center and record-breaking stock price, there's something that can't be ignored: people. AI is boosting productivity, but it's also quietly reshaping the job market. Some of the same companies building this future are cutting thousands of jobs, often using the same explanation: efficiency through AI. The paradox is painful. The technology designed to make us more capable might also make many of us less needed. Economists call it displacement. Powell calls it adjustment. But no matter the word, it means the same thing. Progress comes with a price. And that's where his tone changes. Powell isn't warning of a financial bubble, he's warning of a human one, where excitement about efficiency could inflate faster than society can adapt. He's right to be cautious. Every major technological leap in history has come with two sides: massive growth for a few, uncertainty for many. The question now isn't whether AI will transform the economy. It already is. The question is who benefits from that transformation, and who gets left behind. Because, as Powell pointed out, job growth in America, adjusted for overcounting, is now pretty close to zero. That's the part investors don't like to talk about, and it sets the stage for the biggest contradiction in this entire story. For a man known for measured words, Jerome Powell's tone carried something unusual this time: a touch of irony. The same technology that's fueling record profits could also be slowing down the very job market the Fed is sworn to protect. It's a paradox almost too sharp to ignore. On one side, AI is driving investment, innovation, and productivity. On the other, it's quietly replacing workers, reshaping industries, and widening the gap between those who build the machines and those replaced by them. Powell didn't deny that tension. In fact, he acknowledged it head-on. Many recent layoffs are talking about AI and what it can do. That line hung in the air, not as a prediction, but as a warning. It's a strange reversal. For years, the Fed has fought overheating economies and unsustainable hiring booms. Now, Powell's challenge is the opposite: too much efficiency, not enough employment. He knows productivity gains look great on paper. They make GDP rise, boost corporate margins, and make the U.S. economy look unstoppable. But when those same gains mean fewer workers, fewer paychecks, and fewer chances, the success story starts to feel hollow. That's the emotional twist buried in his statement: pride in American innovation mixed with unease about what it's leaving behind. Because the AI boom isn't just a race for profits, it's a test of balance between speed and stability, growth and humanity. And Powell, the man watching from the center of it all, seems to know one truth that few dare to say out loud: Even revolutions come with consequences. But what if this time the consequence isn't collapse, but something far more uncertain? The more Jerome Powell spoke, the clearer it became. He wasn't just talking about economics, he was talking about the future itself. If the AI boom isn't a bubble, then what is it? A revolution, a risk, or both at once? For every headline celebrating trillion-dollar companies and record productivity, there's a quiet unease underneath, a sense that something this powerful can't come without consequences. Powell's comments didn't erase that fear, they sharpened it. He sees an economy where machines will soon do more work than people, where profits grow faster than paychecks, and where technology races ahead of policy. He knows that kind of imbalance doesn't crash overnight. It builds slowly, silently, until one day it reshapes everything. That's why his words carried weight beyond Wall Street. When the man controlling interest rates calls AI a real economy force, he's not just endorsing innovation, he's redefining what growth even means. But here's the twist. No one, not even Powell, knows where this ends. Will AI trigger a golden age of productivity or a quiet erosion of jobs and opportunity? Will it lift economies or divide them? Those questions have no chart, no formula, no forecast. And that's the mystery that keeps investors, workers, and world leaders awake at night. Because Powell might be right. This isn't a bubble. It might be something much bigger, something that won't burst, but will transform everything in its path. In the end, Jerome Powell didn't sound like a cheerleader or a skeptic. He sounded like a realist. He's seen bubbles rise and burst before, and yet this time, he's calm. Because what's happening with AI isn't built on dreams. It's built on data, demand, and real profits. Still, there's something haunting in his confidence. When Powell says these companies actually have earnings, he isn't promising safety. He's reminding us that this era isn't about speculation, it's about transformation, and transformations don't pop like bubbles. They shift the ground beneath everything. The AI boom isn't just about smarter machines. It's about a smarter, faster economy that's already rewriting the rules, and maybe rewriting what it means to have a job, a career, or even security. Powell knows that money can measure growth, but not balance. It can fuel revolutions, but not control them. And somewhere between progress and pressure lies the question no one can answer. Can humanity keep pace with the technology it created? That's why his message hit harder than a rate hike. He wasn't warning us to be afraid, he was asking us to pay attention. Because if the dot-com era taught us how fragile dreams can be, the AI era might teach us something even deeper, how fast reality can change. And as Powell walked away from that press conference, markets rallied, headlines exploded, and one question lingered in every investor's mind. If this isn't a bubble, then what happens when it finally peaks?